trading session or winding down for the night, welcome. On behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for this global live stream session. My name is Scarlett and I'll be guiding you through this exciting 2-hour journey as your host. Today's live stream is not just a presentation, it's a conversation. It's a window into the engine room of one of the most fast-growing and forward-thinking funded trading firms in the industry. And of course, I'm not here alone. I'm joined by two remarkable guests who have helped shape what WeMasterTrade represents today: skilled traders, mentors, and role models within our community. First, let me introduce to the ever-composed, always insightful owners. Welcome, owners.
Thank you so much, Scarlett. Hello, everyone, and thank you for spending your time with us. I'm truly looking forward to today's session. There's so much to cover, not just about trading strategy or rule, but about the ecosystem that WeMasterTrade offers, how you start, how you grow, to how you earn. This is the kind of platform that doesn't just fund trade, it builds traders.
Absolutely. And next,
Copy trade.
Yo.
good day to everyone joining us from around the world. Whether you're just waking up midway through your trading session or winding down for the night, welcome. On behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for this global live stream session. My name is Scarlett and I'll be guiding you through this exciting 2-hour journey as your host. Today's live stream is not just a presentation, it's a conversation. It's a window into the engine room of one of the most fast-growing and forward-thinking funded trading firms in the industry. And of course, I'm not here alone. I'm joined by two remarkable guests who have helped shape what WeMasterTrade represents today: skilled traders, mentors, and role models within our community. First, let me introduce the ever-composed, always insightful owners. Welcome, owners.
Thank you so much, Scarlett. Hello, everyone, and thank you for spending your time with us. I'm truly looking forward to today's session. There's so much to cover, not just about the trading strategy or rule, but about the ecosystem that WeMasterTrade offers, from how you start, how you grow, to how you earn. This is the kind of platform that doesn't just fund trade, it builds traders.
Absolutely. And next to him is someone who brings sharp analysis and clarity to every chart and conversation. She's strategic, she's sharp, and she's reinforcing our trading space. Please welcome Helen.
Thank you, Scarlett, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me more about today is that we're going to unpack everything, not just what WeMasterTrade offer, but how the trader can truly take advantage of each part of our system. From packages to promotion to scaling and long-term profit sharing. If you ever had a question or even doubt, today is the day to ask them.
And that's exactly what we're here for. Whether you're brand new to WeMasterTrade or already a part of our funded trader program, today's live stream is going to give you the full picture, not just highlight reel. Over the course of this session, we're going to walk you through what WeMasterTrade truly is, what we believe in, and how our programs are designed, and why we're doing things differently from traditional brokers or broker firms. Now, I want to be clear, this isn't about sales, this is about understanding. We want you to know what you are signing up for, what kind of structure supports your journey, and how you can use that structure to not just succeed but scale.
And speaking of structure, we begin by sharing a story behind WeMasterTrade, how we were formed as a funding project, not broker, which is a very important distinction. Unlike broker who free from volume or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in trader, cover risk for them, and share profits. Only when you do well, that's the foundation.
Exactly, and from that philosophy flow everything we offer, especially our trading packages, which will be discussing in detail. We'll explain the logic each one, what kind of trader they ever look at our package and though which one is right for me. Today we will answer that.
And more than that, we also do a live comparison between packages. We break down pricing, account size, maximum drawdowns, consistency rules, and even payouts side by side to help you make a fully informed decision. It's one thing to see numbers on a website, it's another thing to understand the intention behind them.
Alright, and once you understand the packages, the next question is always, how do I stay confident while trading? So we will move naturally into discussing trading rules, which currently is one of the most important part of today's lesson. We will explain what the data loss limit is, how it's calculated, and why it's equal both flow and floating profit and loss, and how to avoid violating it. Especially overnight, we will go into the maximum total loss, the consistency ratio, and we will even extract command understanding about trade sizing, per trade policies.
And we want to explain rule in isolation, where we plan them in context of live trading session. I will share some personal example of mistake I make when I first start trading under funded conditions and how I adjusted. Because rules are meant to restrict you, they there to protect you in integrity of your pro.
And while we are on the topic of helping you succeed, we'll be guiding you through our current promotion plan, including limited time discount codes, trader support campaigns, bonus capital opportunities, and how to properly qualify and submit proof. We have some amazing response to our promotions, but also some confusions. So we'll be showing you exactly what to do step by step.
And from that, we will transition into a discussion on a scale-up plan, which I personally think is one of the most underrated parts of WeMasterTrade offering. Many people don't realize this, but we have a structured growth pathway in place. If you perform well consistently, you don't just get payouts, you actually unlock higher capital tier. It's not just about getting funded once, it's about enrolling a six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income at WeMasterTrade is through our profit-sharing model. This is the heart of what makes us different from broker firms. When you trade on funded account and generate profit without risking rules, we're sharing profit with you up to 90%. But there's more to it than just the percentage. We plan the full payout cycle, threshold, and timeline today.
Now, I know many of you watching today aren't just traders, you're also educators, influencers, and people with large networks. That's why we're also taking time to explain our affiliate program, and we'll do it transparently. We walk you through how commissions are calculated, how affiliate referrals are tracked, and more importantly, what you need to qualify for payouts, including a detailed explanation of the two referee rule and minimum funding conditions.
This is especially important because we want all our partners to feel confident and clear about their earning. We have seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting rigorously, understanding the term, and building long-term income stream.
So as you can tell, this is not just a face level LiveStream, we're diving into everything: packages, rules, promos, scale path, profit sharing, and affiliate opportunities, all with one purpose in mind: helping you make the most informed, empowered, and confident decisions possible.
And we want it to be interactive, not just informative. So if you have any at any point, please drop it in the chat. Our moderator are watching and we will answer as many questions like we can. Your voice matter.
And if you're watching this on real life, don't worry, we will leave a timestamp and somewhere below. And you can always reach out to our team as any follow-up inquiries. Our support team is incredible and they really care about helping traders succeed.
So to wrap up this welcome, I'd like to say that WeMasterTrade is not just a platform. It's a commitment to build real traders, to create fair, structured, and scalable pathway for people around the world who are serious about trading as a profession, not a game. So if you are here to grow, to understand, and to take action, you're exactly where you need to be. Let's dive into the journey together. Let's begin, and once again, welcome to WeMasterTrade live stream. Well, thank you once again for being with us today. Now, before we dive into packages, trading rules, and promotional mechanics, we want to take a moment to zoom out and offer you the full picture of who WeMasterTrade really is, what we believe in, and why we built this platform the way we have. Because you are putting your trust and your trading into a company, understanding its philosophy isn't just helpful, it's essential. And so, this next segment is about origin, intention, and impact. It's about how WeMasterTrade began and what values underpin the firm, how those values translate into real tools and outcomes for traders like you. And to walk through that, I'm joined as always by two people who live and breathe this principle, Owners and Helen. Let's start at the beginning.
Thank you, Scarlett. To truly understand WeMasterTrade, you need to understand why we were created. Many platforms or brokers that evolve from traditional financial institutions, WeMasterTrade was born with the purpose-driven mission to give a capable trader access to capital, regardless of their background, location, or financial situation. We were founded in 2022 as part of WeCopyTrade Group, headquartered in Vancouver, Canada, while CopyTrade Vietnam on signal sharing, investor network, and copy trading tech. WeMasterTrade was designed to serve a more focused vision to identify, support, and scale high potential trade, giving them a pathway of earn professionally without risking their savings.
And it's important to know, WeMasterTrade is not a broker. That's not just a label, it's fundamentally different. We don't profit from spread or commission. Our success is directly tied to the success of our trader. That's why everything we build, from our instant funding packages to our profit sharing model, is structured with alignment in mind. We take the capital rate, we give you the roadmap to bring the skill. But we also know that skill alone isn't enough. Which is why one of our founding principles is education first. We don't want the trader to blindly follow the rules. We want them to understand the logic behind the structure. That's why we have invested heavily into the WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
And that academy is something special, with courses ranging from introductory trading psychology all the way to advanced risk calibrations and multi-asset strategy design. The WeMasterTrade Academy isn't just about theory, it's about implementation. We designed the curriculum to match the real-world trading environment within WeMasterTrade. So what you learn, you can apply directly to your funded account. And to ensure that our system and content meet global standards, WeMasterTrade is proud to hold ISO certifications, which confirms that our educational products and traders development programs meet rigorous international criteria for quality, structure, and learner engagement.
That certification is a big deal because it's a long-term commitment to developing trader, not just collecting fees in an industry where many college platforms come and go. WeMasterTrade has positioned itself with real operational stability, compliance framework, and internal accountability. We're not here for a session, we're here to help build career.
And we have seen the commitment translate into real story. If you visit our testimonial page, we will find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa, all talking about how WeMasterTrade have done not just earn more, but trade with purpose. They talk about the passing challenges after a year of struggling with the retail broker. They talk about finally being able to trade without the emotional burden of risking personal funds. And now we had a student become a full-time trader. We have had a woman re-enter the finance world after career break, and we had a young professional from underbanked region fundable asset markets with a fund account. That's the impact, and that's what writers.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you, but also want to stay engaged and up to date. We maintain a regularly updated blog session where our team of experts and educators share weekly insights, trading psychology breakdowns, market reaction and platform updates. We believe that learning never ends, and we keep our traders informed. But let's talk about culture. What makes WeMasterTrade different isn't just the product offering, it's the community mindset. We actively promote trader integrity, respectful competition, and knowledge sharing. Whether you're in a Telegram group, watching our YouTube series, or engaging with us on live support, you'll see that we actually listen.
And I speak honestly here in many platforms. The trader is a just a customer. At WeMasterTrade, the trader is a product. Your performance drives the business. Your voice serves the platform, and your consistency determine how far we can scale together. That mutual accountability is rare and something we're proud of.
And if you ever doubt whether this part is real, whether a trading career is truly within grace, I encourage you to read the testimonial, take a look at our funded account, and connect with the people who go through the system. The story are real, the capital is real, the reasons speak up for themselves.
To summarize, WeMasterTrade is a capital allocator, a talent asset regulator, and an education-first trading institution. We're here to challenge the status quo of trading assets, to build systems that reward performance over promotions, and to create real scalable income opportunities for traders around the world, regardless of their starting point. This is more than a blog firm. It's a trading movement, and if you're ready to be a part of it, today's live stream will show you everything you need to know. Thank you, owners and Helen, for that deep and honest walkthrough. Coming up next, we're going to take this foundation and connect it directly to our actual offering. That means we'll be discussing all the different account packages available at WeMasterTrade, how they differ, who they are designed for, and what kind of results you can expect from each. Now that we explore who WeMasterTrade is and the principle we stand for, it's time to move into one of the most essential parts of this live stream, an in-depth discussion on our account packages. This is where it all begins for most traders, choosing the structure that best aligns with their goals, their styles, and their current skill level. And when we say packages, we're not just talking about dollar figures, we're talking about frameworks. Each package at WeMasterTrade represents a different pathway toward growth, and today we walk you through all of them, what they offer, how they structure, and most importantly, who they design for.
Exactly, Scarlett. At WeMasterTrade, we don't believe in one size fit all model. That's why we build two distinct product line for trade: the challenge package and the instant funding package. It line include a variety of account size and configuration because we know that traders come with different strength, risk ability, and timeline.
Let's begin with the challenge model, a two-phase evaluation system built for traders who want to improve the skill before being allocated capital. It's structured, fair, and has become the most popular rule for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin with a simulated account and your goal is to meet specific profit target. while staying within strict and reasonable risk parameters. There are 3 stages in total, phase 1, phase 2, and then the final stage.
Take for instance our $10,000 challenge, a great starting point for traders who want to minimize upfront costs while building a track record. Let's break it down phase by phase.
In phase 1, you need to hit a 8% profit target with 800 and without reaching a 5% daily loss or 10% overall loss limit. You have unlimited time to achieve this. That's the key from many platforms. We don't pressure you with deadlines.
When you pass phase 1, you will move to the phase 2, whether your profit target drops up to the 6% that 600. The risk will remain the same. And here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed the target.
Finally, one power clear, you enter the funding account when you trade with real capital, which have no profit target, and your profit sharing jump to 90%. That's one of the high in industry.
And this is highly ideal for newer trader or experienced trader who want to start with a lower pressure and learn the system. If you're still refining your strategy or want to get the feel for WeMasterTrade risk framework before scaling, this is perfect package to begin with.
So now for those who are confident in their strategy and want to start with a larger account size, we offer $25,000, $50,000, and $100,000 challenge packages. The structure is similar, 2 phases, the same 5% daily loss, and 10% total loss limit, but the profit targets scale proportionally.
For example, in the 50,000 challenge, you will need to hit 4,000 in phase 1 and 2,000 in phase 2. While the target is higher, the level remains the same 1 to 100, giving you room to adjust position sizing.
And the 25,000 to the 100,000 challenge are ideal for trader with more capital management experience, especially those looking to eventually scale into a larger funding account. If you already passed auto growth challenges or have a strong verified trading history, this is a good step up.
Every challenge package comes with a one-time fee. For example, just $45 for the $10,000 challenge. This fee is refundable once you become funded and meet minimum performance conditions. And if things don't go your way, you're eligible for a 30% reset discount to start fresh. What if you don't want to go through a challenge at all, but instead want to access a real capital immediately and get paid based on purely on results? That's where our instant funding package comes into play.
And this is why WeMasterTrade truly set itself apart. Our instant funding model is designed to give experienced disciplined traders the chance to trade real capital from day one. No evaluations, no demo state, just full live trading backed by a structured, fair, and strengthened system.
And one market ever for accessible is that you can choose from several different account types depending on your style, preference, and your goal. Today we're going to walk you through each of 5-man instant funding packages: standard, 51010, 510 euro, 51010 OBC, and customized. We compare in the detail, but more importantly, we'll help you figure out which package is right for you.
Let me set the scenes quickly. All of our instant funding packages give you live trading access from day one. That means no challenge phases, no evaluations. You pay once, follow the rules, and you're trading a live capital. And every account, no matter the size, includes no time limits. Up to 90% of profit share, scalable and toward $1 million, support for EA swing trade scaling, and even HFT. Now let's go package by package, and as we go, owner Helen, I want you to jump in with real advice. Who should actually choose which one, and what kind of traders you are seeing succeed with each?
Let's start with the standard package. I always describe this one as best friend for trader who just wants stability. You're getting up to 200,000 in capital with a very manageable 4% daily lot limit and 6% overall lot limit.
And it's a lot of times steady account that doesn't put you overtrade, and with the profit split up to 90%, there's still earning potential even if you are taking a slow and steady approach.
And how about commissions?
Competitive across the board, Forex at $4 per lot, Golf at $4 per lot, Indy at $1, Stock at just $0.07 per lot.
And everything it allows new trading, scalping, weekend holding, EAs, SFT, you name it.
Well, so for the audience, if you're someone who trades regularly, understand your strategy, wants a full range of assets, and plans to play a long game, this is your sweet spot.
And it's perfect for intermediate or to advanced trader who already know their ass but don't want to start with the targets made challenge. And if you ever had an account blowout due to unrealistic rule, you will find the standard model refreshingly fair.
I always say so swing trader, the 4 or 6% risk profile gives you enough flexibility to hold multiple day positions, especially with weekend holding full allow it.
Alright, moving up a gear, let's talk about a 5-10-10 package, same capital ceiling up to $200,000, but now you get 5% of the loss and a wider 10% overall limit. Why does that matter?
That's actually question is massive for trader who scale into the position, take a multiple and try per setup. You got more room to breathe, especially in high volatility markets.
And the profit target here is also 10%, with a line well with the risk window, plus you still get full support for scalping. EA new trading is very trader friendly.
And this is bad for day trader, especially though trading assets like Nasdaq or gold that move fast. If you got attached intraday trading and just need some breathing room, this is your pocket.
And also for traders who want structure but don't mind having a profit target, the clear milestone motivates some people, especially if they pay off oriented.
So, here's now a professional favorite, a 5-10-0. You get 5% daily and 10% overall loss, but no profit target, none zero.
And that blessing for high precision trader. You're no longer chasing a number, but you just focus on protecting equity and growing capital slowly and safely.
This one loved by low frequency trader and sniper. If you enter 3 to 5 trade a week, this is your space. You're not personalized for patient. You actually reward for it.
Veteran swing trader, risk conscious trader, people who prioritize consistency over speed. If that's you, you try here.
And let's be honest, not everyone wants to hit targets. Some just want to trade well and scale up cleanly. This is their home.
Now, for the rule breakers, or rather those who don't want to be evaluated on how even their profit are, the 5-10-10 OBC removes profit consistency tracking, right?
Exactly, 7-5 or 10 risk rule 5, but you're not required to keep your profit growth smooth. One big winning day is totally fine.
That said, trade copier are not allowed in this one, so it's for manual trader only, and you need to trade responsibly. But for aggressive trader who sometimes hit big spike, that's it play.
Is it perfect for high risk reward trader or anyone who had an issue with consistency rule at other firm? You trade how you want, just keep inside the rolled out box.
Okay, and last but not least, the customized package. This is WeMasterTrade saying, you know what you need, let's build it together.
You can adjust daily lot, overall lot to your liking, plus you can fund up to 400,000 more and then on an account.
It's premium, flexible, and come with all trading style below, including EAs, new trading, weekend holding, SFT, and more. And top tier professional as half fund trader, signal provider, high volume trader. Anyone with a very specific structure in mind, this package will let you build it.
I always say if you try order a model on and nothing quite fits, build your own blueprint with customized. That freedom is rare.
To sum up, every instant funding package we offer comes with a clear risk parameters, fair commission, deep market access, and real profit potential. There's no time limits and payout start as early as 1 day.
And no matter your strategy, scalping, swing, echo, and armor manual, There an account that align with you. The key is picking that one right now, so you can start building consistency from the start.
And if you ever ensure our team is available 24/7 to guide you, but the real secret, pick the account that fit your discipline, not your dreams. The right fits away our perform the biggest promise.
Up next, we'll walk you through exactly how to protect your account, avoid breaches, and understand the key rules and consistency rules that power our entire platform. Alright traders, now that you're seeing the packages, let's talk about the part that either makes or breaks your account. That's right, it's time to dig into the day trading rules and how to actually stay compliant once you're funded. Because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. The number of one reason traders lose their account, it comes down to one thing, the daily loss limit.
And yet, the rest daily lot is one rule trader think they understand until it kicks them out of their account at 3:70 p.m. on a random Tuesday.
But here's the good news. Once you understand how it really works, it's become one of best your tool for risk control. So today, let's break it down from top to bottom.
Also, what is the daily loss limit? Also called maximum daily loss.
It's the maximum account of loss you are allowed to incur in both floating and flow trader. On any single trading day, if your equity fall below that limit, even for a moment, your account is automatically closed.
And the key thing here is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's a really important distinction, and it's what trips a lot of people up.
Let's walk through a live example. Imagine it is the start, day 5, your balance is $105,000. Your equity, however, is higher, $107,000 because of overflowing profits.
If you're on a 4% daily loss limit, we calculate it of the highest number, 107,000.
So 4% of 107,000 is around 4,000. That means your equity for the rest of the day can drop below the 103,000, and boom, the account is gone.
Right, and I think it's important to point this out. The system isn't waiting for a close. It's real time. Even if your trade is floating along saying you haven't closed it yet, if your equity dips below that threshold for even a second, that's it.
And now let's reverse it. Say at the start of the day 7, your balance is 100,000, but your equity is 99,000. Because your open trade are slightly in loss.
Since balance is higher, we pay for the 4% on the initial balance, so 4,000.
So now your equity must stay above $96,000 throughout the day. If it drops to 99,900, liquidation kicks in, no warning, no margin call.
And the system will send a market order to close all trade. Everything liquidated. Your account is disabled, and you can try it again unless you purchase a new package.
And here the kicker, the auto close happens when the system detects the vessel will cross it. But due to market fluctuation, your final profit and loss might look worse than the actual result. That's because the system executes the closer based on your price slip back at your time of liquidation.
So even if you only intend to take a $3,900 loss, one slip by spike in gold or Nasdaq and suddenly is $4,200. That's why we say don't ride the edges.
Alright, let's talk about how to avoid violating this rule, because this is where the pro mindset kicks in.
First tip, know your buffer. Never plan to take you right up to the edge of your limit. Leave 10 to 50% room below the mark loss, especially in volatile market.
Tip 2, check your equity, not just your balance. I can stress this, more traders that at the balance already, but your floating lot is wrapping your equity. You're heading toward the violation.
Tip 3, use a dashboard or tracker. Inside WeMasterTrade, we provide risk dashboard to show your live loss status. Use them, check them, don't rely on memory.
Also, suppose trading after a big loss early in the day, if you lost 3% in the first hour of London session, maybe it's time to stop and reflect, not try to reserve trade your way back up.
Another big one, trade smaller during news hour. If your trading goes during an NFP with a full loss size, you are practically begging to break the daily loss rule, cut the position size, and rifle volatility.
What are the top rookie mistakes you see when it comes to daily loss?
Number one, over leveraging. Trader opening position that are 5, 6, or 7% of their account, thinking they close quickly, but if the trade turns red fast, it's really too late.
Number two, holding overnight without checking exposure. If you hold trade overnight and wake up with a 60 pip gap, the daily loss could be here before you even open your eyes.
In the third, assuming that close trades are all that matter, you are not. Remember, equity include both floating and closed position. The total equity line is your score.
I always say this to new trader, the daily loss rule isn't your enemy, it's your account error. It's designed for protect you from doing something irreversible.
Exactly, it's for discipline. You can be aggressive, but only within the box. And if you learn to trade inside that box, you will last longer than 90% of the market.
And one last note, this isn't just about rules, it's about trust. WeMasterTrade funds you because we trust that you'll manage risk responsibly. The daily loss is there to protect that trust on both sides. And next time we will have a little break before we come to the next stage. Welcome back, traders. In the previous session, we covered the daily loss rule, and if you haven't already clicked that one, you're missing out. But now we'll move from the daily boundary to the absolute boundary. I'm talking about the maximum loss limit, also known as the account stop loss, the line that can't be crossed, not just for the day, but for the entire life of your account.
And this is where a lot of traders the rule work. They think, well, I didn't hit my daily limit, so I'm fine. But then a week later, they chip it away their account and suddenly liquidation.
The max loss rule is the last safety net. If the daily loss is your daily seatbelt, then the max loss is your airbag. If that limit is hit, it means your account is deemed unplayable under your current strategy and is closed immediately.
So what exactly is the max loss rule? Let's define it. It's the total amount you lose across all trades for the entire account. If your equity, that is, your real-time capital including open trades, ever drops below a certain percentage of your starting balance, your account is gone, period.
And unlike the daily loss which reset every day, this one doesn't reset, it accumulates. You can lose 2% one day, 3% the next, and in your total loss across the line, that's it.
And the percentage limit depends on your packet, typically either 6% or 10% of your initial balance, not your equity, not your profits, but the original number you start with.
So let's walk through a concrete example. Suppose you have an instant money account with an initial balance of $50,000 and your max which is $3,000.
That means your equity can never go below 47,000 ever. Doesn't matter if you make 1,000 yesterday, the total loss from your high point back down to that threshold is what matters.
And remember, this rule includes both low losses and floating losses. If you have a lot at 2,000 in low trade and you have another 1,200 floating rate, your equity now at 46,800. That is below the limit account closed.
And just to be clear, it's not about the net gain or loss across trades. It's about where your equity stand in real time related to that stop loss floor.
Here where it gets interesting and a little tricky. Let's say your account grew to 51,000 currently, you're in profit.
But your max loss limit is still beyond your original 50,000 starting balance. So if your limit is 6% and threshold is still the 47,000, that changes how much room you have to fall before you hit it.
Exactly, you now have $4,000 in total buffer because $51,000 minus $47,000 equal to $4,000. So your profit gives you cushions, but the floor never moves.
And when your equity drop below that maximum loss threshold, even by a few dollars, auto liquidation trigger, all trade are closed immediately as a market price.
And again, like with the daily loss, if there's volatility or slipback, your account might close out below that line. That's the execution reality.
And most importantly, once it's breached, that account is permanently disabled. You need to purchase a new package if you want to continue trading. No resets, no rollbacks.
And alright, let's get tactical. How do you actually trade inside this rule without constantly worrying about it?
First, check your total close losses every day. You should always know how to close your max loss floor. Don't wait the dashboard one, calculate it manually.
The second, use your profit as progression, not commission. Don't just floating profit at a green light to increase risk. Instead, consider locking in scan by reducing loss size when you have.
Third, manage your flowing loss aggressively. Even if you're positive overall, a single trade with poor stop placement can save you from safety to shut down in a few minutes.
4. Stay cool when you close. If you're down 5% out of your 6% limit, that's not the time to double down. That's the time to step away, pause, and rethink your entry.
And the big mistake is underestimating floating drawdown. Trader could love to be loser and think, okay, I still got room, but don't forget about the 4 trade floating minus 1,800.
Second, traders who trade recovery after a bad day. They lose 4% in the one day, come back, swing the next, and think they will make it back, and take another 2%, boom, violation.
Third, and this one hurts, ignoring slippage during major news. Even with a tight stop, news candles can guide you straight through your limit.
The Markov rule is there for a reason. It's not there to punish you. It's there to protect you from yourself. Every successful trade I know see that stop loss, whether personal or institutional, at negotiable boundary.
Alright, is reality check. If you're consistently rushing up against your mark loss, the problem isn't the rule, the problem is your system or your psychology.
At WeMasterTrade, we're not just building capital, we're teaching structure. In the Maslow's rule, it's what separates gamblers from professionals. So remember, your max loss is a percentage of your starting balance, typically 6% or 10%. It's calculated using equity, not balance. It includes both closed and floating losses, and once breached, your account is gone. Coming up next, we'll explore the consistency rule and why steady profit matters more than a big spike when it comes to growing, scaling, and getting paid.
And if you ever make the 5,000 in one day and then make 200 the next 4 days, and they wonder why your payout was flat, then next statement is for you.
Let's try into the rhythm of profitability and how to stay consistent under WeMasterTrade model.
Alright traders, we talk about the daily loss limit and we'll just cover the maximum loss limit. Two pillars are protecting your capital, but now it's time to shift gears just a little and talk about not about risk but about results. Because here's the thing, it's not just about staying alive in the game. At WeMasterTrade, we want to see traders grow, scale, and actually earn. And to do that, you need more than just a winning day. You need something called profit consistency.
And rule right here, the profit consistency rule is what separates the lucky spy from the reliable trader. It tells us whether you can make money over time or if you're just hoping to hit one big winner and roll the dice.
And more importantly, it's also how we evaluate if a trader eligible for withdrawal, profit sharing, and even scale up. So if you're funded and you're wondering why your payout didn't go through, this could be the reason.
So let's define it clearly. The profit consistency ratio is the measure of how even your profits are from day to day. The more balanced your profit, the lower your ratio. The less consistent, meaning you have one giant profit day and then smaller or losing day, the higher your ratio.
The idea is simple. If 80% of your total profit come from one day, that's not consistency, that looks a risk. What we want to see the trader who make profit day after day, even it's small, that's what we can scale.
And how it's calculated? The formula is really straightforward. Take your best trading day profit and divide it by your overall profit. Assume you start with the count, then multiply by 100.
So best day divided to total profit and multiply to 100 equal to the profit consistency ratio.
And just to be clear, best day refers to your high close profit in a single calendar day. And total profit is a sum of all your closed profit minus any close losses or open losses across the line of account.
And let's say you had the following result over 5 trading days. The day 1, 100, day 2, 200, day 3, minus 50, day 4, 100, and day 5, 60.
That means your total net profit across 5 days is 100 plus 200 minus 50 plus 100 plus 60 equal to 410.
And your best day was day 2, that's $200 profit.
So now we apply the formula of 200 divided 410 is equal to 0.48 78 multiply that by 100 and you get a profit consistency ratio at 48.78.
Now, let's say your account requires 20% profit consistency with e-commerce. This trader is way above that, so they wouldn't qualify for payout yet.
So even though this trader is profitable, they're not consistent enough. They have one big day and made up almost half of their total profit. That's not sustainable. That's what we are looking at.
And this is where I really want to speak to traders. If you're relying on one or two a big day to carry on your entire account, that's not professional trading. That volatility, you can get lucky or you can go stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluates your consistency over time. Traders who show long-term balance are the ones who get scaled up, who get freer, who get trust with more capital.
Alright, so let's address the numbers. What's unacceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your bet should not exceed 20% of your overall profits. And let's say you're over the limit, don't panic. You're not disqualified, you just so keep trading and even out the curve.
Now, here, how to do that? 1. Trade smaller size for a few days. 2. Trade smaller control win, aim for $200, $300 days. 3. Avoid big swing trader. That could spike your ratio again. 4. Spread profit across multiple days, not one month setup.
And for those using EAs, monitor your equity curve. If your EA is growing profit heavily into one day, you might need to rebalance it. The bot might be profitable but won't pass this rule unless it's configured with payout logic in mind.
Some common mistake to avoid. Mistake number 1, trader hitting targets early, then taking the rest of the reserve. That inflate your bad day and lead the rest of your curve up.
And mistake 2, overtrading after a big day, thinking I'm safe now, and trying to squeeze in more instead averaging out that high ratio.
Mistake 3, thinking this rule is just a hurdle. It's not, it's a reflection of what we actually look for in our master traders.
At the end of the day, this isn't about controlling you, it's about building habit that can handle scale. If you can be consistent with 25,000, what happens when we give you 100,000 or more?
Exactly, consistency is what makes you safe in betting. As WeMasterTrade, we fund trader, but we also study them. This rule tells us whether you're sure about long-term trading.
And we've seen it time and time again. The traders who respect this rule, they're the ones who get multiple payouts, referrals, and grow into six-figure funded accounts.
And some of the rule, understand it, use it as a feedback tool. If your ratio too high, great, you mean you got profit. Now keep going, balance this out.
And remember, you don't need to calculate it manually. WeMasterTrade dashboard calculate your profit consistency ratio automatically. You can check it anytime under your statistics tab.
To recap, this rule is about balance, not volume. Aim to keep your best day under 20% of your total profit. Spread your wins across multiple sessions and monitor your progress in the dashboard. We work through the daily loss limit, tackle the maximum account loss, and examine how your profit consistency shape your long-term payout and growth. And now we arrive at the final and perhaps most overlooked rule of all, the risk consistency rule, or what we call the discipline test.
That's right. Traders often think the biggest enemy is the market, but truthfully, it's inconsistent, especially in how much you're risking from one trade to the next.
This rule doesn't look at how often you win, it looks at how stable your risk is and how professionally you're matching your position sizing. And if you're sure about scaling at WeMasterTrade, this rule is non-negotiable.
Let's break it down. At its core, the risk consistency rule is simple. You are not allowed to risk more than 2% of your initial account balance on any single trade idea.
And in that include all losses associated with that trade idea, both low losses and floating losses, even fee, commission, and swap are counted.
And for some account like the 510 no PC package, the rule gets even stricter. Their limit is 1% per trade idea, not 2%.
Why does this matter? Because consistency isn't just about outcome, it's about the process. The more erratic your position sizing is, the more volatile your equity curve becomes, and that makes it hard to scale.
And this rule protects both you and the firm. It helps reserve capital, prevent large equity swing, and make sure your egg plays out over time.
Typically, at your account has best if your position size pulled up and down, a 0.5 loss one day and 5 loss the next, the system flagged and not structure is covered.
This is where it gets technical, but stay with us. The term trade idea isn't just one order, it's a group of trades that share the same logic.
If you open trade by position on go at different time, that's one trade idea.
Because it's the same symbol, same direction in the lower around the same time, even if you open them at different time, they seem at a single and 5% from the risk perspective.
So, the system doesn't look at your trades in isolation, it groups them into logical bundles and applies the 2% rule across the entire bundle.
And you can have multiple separate trade ideas as long as each one respects the risk limit.
For example, if you go long on gold, short on buy GDP TPY and short on AUD USD, and each position and hit on the same direction and aside, there are 3 separate trade ideas, and each one can reach up to the 2%.
And what's not allowed? Let's say you go buy and go, and then you go buy again and again. You now have 3 open positions in the same direction on the same axis.
So the system treats as one trade idea. So if the combined floating risk or even total loss from the position is to 2% of your starting balance, and boom, you got broken through.
And another mistake, opening multiple go buy, then closing 10 minutes later, and 2 orders together. The system still group trade close within 3 minutes of each order. So be mindful of your close timing.
Let's go hands-on. Suppose you have a $10,000 account. The 2% max risk per trade idea means you can't lose more than $2,000 on any trade idea total.
So you open 2 go buy, 1 loss it. You don't play a stop loss, new hit, drop, market drop 100 pips. It's loss at 100, that's 200 total.
Your right is a lie. If leeway or swap out of the actual dollar, that's it. Rule broken, account locked or liquidated depending on enforcement model.
And on some accounts, especially instant funding accounts with stricter tolerance, this breach may result in loss of funding status or immediate closure.
And we have some pro tips to stay consistent. Tip 1. Set your loss size beyond account risk, not emotion. Know how many pips equal 2%.
Tip 2. Use stop loss order religiously, set them based on risk per trade idea, not random chart level.
Tip 3. Don't stack trades without calculating combined risk. Just because one position is below 2% doesn't mean 3 of them are.
Tip 4. Label your trade idea mentally. If you're entering on the same setup, choose as one side accordingly.
Tip 5. If you want to split an idea into multiple entries, do it small. Scale it smaller. Use micro lot if needed. Keep the total exposure below 2%.
The most common reason trader break this rule, stacking multiple in try as one trade idea thinking is still separate.
Second, opening high risk trader after win. Assuming they playing with how money is spoiler, the market doesn't care.
Third, neglecting floating loss. The trade may not be closed, but the floating rate still counts toward the 2% risk.
And this isn't church policy, this is a professional practice. Hedge fund follow this, bank follow this, real trader follow this.
Exactly. We're not here to micromanage you. We're here to protect your account and your capital and the integrity of this community.
And traders who internalize this rule, who understand that small, consistent risk is the foundation of scalable capital, Those are the ones we grow. Those are the traders who go from $25,000 to $1 million.
So if you want to be a professional trader, you have to think like Wayne. And professional trader always know how much they making on every trade every day.
And if you're still guessing your loss side or opening trades because setup feel right, take at your side, set it up, get stronger.
This is more than a rule, it's a habit. Build it now and the path to bigger capital and larger payouts become way more predictable. And that, my friends, for essential rules of trading at WeMasterTrade: daily loss, maximum loss, profit consistency, and risk consistency. Master these and you're not just staying compliant, you're building a foundation for serious capital management, long-term payouts, and scaling. And alright everyone, this is it. You made it through the risk rule, the profit conditions, and the structure of our accounts. Now let's talk about why it's all worth it. Because at the end of the day, we know what every trader really wants.
More capital, more room to trade, bigger loss, higher reward, without ever putting your own money at risk.
And that is exactly what the WeMasterTrade Scale plan is built to provide. It's your roadmap from being a small account trader to managing a 1 million funded account. And it's not fantasy, it's clear path and defined milestone.
A scale plan is our performance-based growth program. As you trade well, meaning you hit your targets, avoid violation, and manage trade risk control, we increase your capital allocation. In other words, you earn more room to trade without spending more out of pocket.
And let's be clear, this isn't tied to subscription model or gimmick. You don't pay for scale up, you earn it through consistency, profit, and skip life.
And the scaling is aggressive. We're talking doubling, tripling, and endlessly scaling you all the way to 1 million in funded capital, depending on where you stop.
At WeMasterTrade, we offer two types of scale plans depending on your account type. The first is percentage paid scaling and the amount paid scaling.
Let's start with the percentage-based plan. You begin at an evolution trader level 1 with 100% of your base account. Hit the 20% profit target with profit consistency, and you move to level 2 where your capital increase by 50%.
From there, the world is loyal. Level 3 at 300%, level 4 at 600%, level 5 at 1,200%, level 6 at 2,400%, and finally the max is 1 million.
And for each level, don't just need to hit the profit target, you also need to complete at least 2 payout cycles, so the system knows you're not just performing, you're stable.
Now for instant funding account, the scale up work with set dollar target, and the plan adjusts depending on your initial funding size.
And let's take the 10,000 funded trader at an example. Here how the level look. Level 1 at the 10,000, level 2 at 50,000, level 3 30,000, level 4 60,000, level 5 120,000, level 6 at 240,000, level 7 or 480,000, level 8 600 and 650,000, and level 6 at the 1 million.
Each step has its own profit target, usually 10 or 20%, and some levels require profit consistency, especially in the early stages. Once you're beyond level 3 or level 4, the consistency department drops and it becomes all about raw performance and discipline.
And if you start with a 25,000 account, your profit target is 5,000. Hit that with consistency, your boom up to 337 and 500, then 700 and 5,000, then 150,000, all the way to 1 million.
And don't worry, you don't lose your account if you don't hit this target 5. There are no time limit. You will within the rules?
Well, to move to the next level, here's what you need to do. Reach the specified profit target. Avoid all violations, especially max loss or daily loss. Complete at least 2 successful payouts. Maintain profit consistency if required for less stage.
When no conditions are met, we issue the personalized trading agreement and operate your account site.
And the best part, with a bigger account, you earn more without increasing your risk per trade. That will capital leverage. And let me be real for a second. The most common mistake, overtrading to fork the target, to the put too hard, trying to scalp fast and violating drawdown.
And another one, ignoring consistent in the early level. If you make 80% of your profit in one day, that payout won't qualify. You need to spread your win.
And of course, not planning your growth. You should know what your next scale target is and trade in a way that prepares for it. Don't just trade for today, trade for level 7.
Scaling each financial is mental. Every level bring more capital, but also more responsibility. If you're trading 10,000, how will you handle 300,000?
Exactly, that's why the scale up is step by step. You test your psychology, your discipline, your patience long before we have your 7-figure capital.
And that's what makes it real funding. Not demo hype, not a gimmick. It's a structured capital ladder for real traders.
So if you're wondering whether it's worth staying consistent, patching challenge and trading patiently, this is your answer. From 10,000 to 1 million is possible, and it be done by WeMasterTrade trader.
It started one rule following, profit making, discipline one, and we grow it.
So take your time, learn the structure, respect the rules, because here at WeMasterTrade, when we say good scale performance, we mean it. And with that, we grab up the full walkthrough of WeMasterTrade funding system, from account setup to risk management to startup. Whether you're starting with $10,000 or $200,000, the road to $1 million is real. Coming up in our final segment, we will go into the news point.
Okay, wait a second. Okay, we start with the first event today at 10 a.m. New Zealand inflation expectation. The quality inflation expectation in the New Zealand had slightly declined from the 2.29% to the 2.28%. Although the change is minimal, it's a signal that market participants and analysts expect inflation to stability or slightly ease over the next period. This data is closely monitored by the Reserve Bank of New Zealand. As a fact, that this decision making on the monetary policy, a lower inflation expectation may reduce the urgency for the further rate hike, especially if growth data is also softened. Market reaction may be the new unless confirmed by other dovish indicator. For the New Zealand trader, it could be slightly bearish if viewed in the context of a possible shift more a commodity policy. The next event at the 6 p.m. GDP Bank of England monetary policy decision. This is a closer high in parliament that occurred simulatively softening overall market sentiment towards GDP. There is provide deep insight into the central bank assessment of the economy, inflation, and future rate path. Given the context of the rate cut, the tone of the report likely dovish with the potential reversion to growth or inflation forecast. Any mention of a concern about economic slowdown, a lower inflation projection, or caution on further hike could be reinforced the dovish interpretation. NBC official bank rival. The said involved distribution is significant. In the previous meeting, the committee were more hawkish with the three members still for rating high. Now the majority have shifted to the neutral and even though one member supported cut, the signal in the major chance is a BOE outlook, suggesting that the tightening cycle is either over or very near its end. Market participants are likely to interpret as dovish rising in a possible pause and even rate cuts in the near future. Given an official bank rate, the Bank of England had officially cut its benchmark interest by the 25 basis point. This move were in line with the forecast, but still marked in the notable pivot. Record had typically seen the supportive role, but negative for the current and short term. The motivation focus may include signs of weakening consumer demand, slowing wage growth, and softening inflation. It likely to put the downward pressure on GDP, especially when combined with the dovish tone with the MPC world. That's all the news for today.
Thank you all for joining today's live stream with WeMasterTrade. We hope the information shared that give you a clearer understanding on our programs, funding packages, and the opportunities available to grow your trading journey. Don't forget to like, share, and subscribe to our page or channel so you won't miss any important updates or upcoming events. If you have any question, feel free to send us a message on our live chat, and we're here to help. We look forward to seeing you in our next live session. Until then, trade smart and stay profitable with WeMasterTrade. Goodbye and see you soon.